Semiconductor stocks just got absolutely hammered today, and we're talking double-digit losses across the board. Qualcomm, AMD, everybody got hit. So what's really going on under the hood? And should you be worried? Let's find out what it means for your portfolio. Hey there, I'm Alex, and welcome back to Market Byte USA. We got a lot to unpack today across equities and commodities. Here's the thing about making money in the markets. It's all about timing your trades with accurate, up-to-the-minute insights. That's exactly what we're here to give you every single day, a daily market analysis video. So stick with us as we dive into today's action, break down what's moving and why, and then set you up for what to expect when the bell rings tomorrow. Before we jump in, if you're not already subscribed to the Market Byte USA, hit that subscribe button and give this video a like. Let's start with the indices. All right, so the Nasdaq, that was not a great day. Down 4.18% today alone. And if you're looking at the week, we're sitting a loss of 4.68%. That's a real pullback. The big story here is tech, and specifically semiconductors. They just got crushed. We're talking about a rotation out of some of the higher flying chip names. Part of it's this jobs report that came in hotter than expected, which means the Fed's not cutting rates anytime soon. And that makes investors way more cautious about expensive growth stocks. So the Nasdaq feeling the pain today. The Dow had a better day than the Nasdaq, but let's be honest, that's not saying much. Down 1.35% today, only down 0.32% for the week. So here's what's interesting. The Dow is holding up way better than the Nasdaq. That tells you investors are rotating out of growth tech and into more defensive, boring blue chip stuff. Value's holding better than growth right now. It's a risk-off signal for sure, but not as aggressive as what we're seeing in the tech space. Now let us look at energy and fuel. Oil slipped today, down 3%, but here's the thing. On the week, we're actually up 3.31%. So crude's still holding some strength despite today's pullback. The bigger picture is that demand concerns are creeping in with all this economic uncertainty, but OPEC's still managing supply pretty carefully. So we're in this weird spot where there's some near-term pressure, but the weekly trend says the bulls still have some control. Natural gas had a rougher day than crude, down 3.59%, and the week's been weak too, down 2.13%. This one usually comes down to weather and seasonal demand. We're heading into summer, so cooling demand should pick up, but right now people are pricing in mild conditions and good storage levels. So until we see a heat wave or supply disruption, expect nat gas to stay under pressure. Moving on to metals. Gold is doing what gold does when people get nervous. It went down. Yeah, I know, that sounds backward. Down 2.72% today, and down 4.53% for the week. But here's the deal. Even though we're seeing economic uncertainty, the hot jobs report is actually pushing real interest rates higher, and that makes holding gold less attractive. When you're getting paid more in cash, you don't need to sit in gold. So the Fed rate expectations are working against the precious metals trade right now. Silver got hit even worse than gold, down 7.83% today, and down 10.08% for the week. That's a brutal week. Silver's way more sensitive to economic slowdown fears because it's got industrial demand on top of the safe haven stuff. So when growth stocks are getting sold and people are betting on slower economic growth, silver gets double whammied. It didn't just follow gold down, it accelerated downward. Now here are the top movers of the day. Qualcomm is at 215.94, and this one really hurt. Down 10.98% just today, and down 13.66% for the week. Semiconductors in general got destroyed, and Qualcomm's tied to smartphone demand, which everybody's suddenly worried about. The hot jobs report is making people think the consumer might be tapped out, and if phones are discretionary spending, that's a problem. Qualcomm's also a bellwether for the whole chip space, so when it drops this hard, it drags everything else with it. AMD is sitting at 466.38, down 10.86% today, and down 9.63% for the week. Similar story to Qualcomm, semiconductor weakness, but AMD's actually holding up slightly better on the week. AMD supplies chips to AI data centers and consumer PCs, so it's exposed to both ends of the spectrum. Today's sell-off is part of the broader tech derating, but the fact that it's holding better than some peers suggests there's still some AI data center strength underneath. Lam Research is at 303.28, down 9.85% today and down 4.68% for the week. This one's interesting because it's actually the most stable of the chip movers we're looking at. Lam sells equipment to chip manufacturers, so it's a step removed from end-market demand. The pullback today is real, but the weekly chart shows it's bouncing around less than the actual chip makers. Could signal that the semiconductor equipment space has a bit more conviction underneath. ORCL is at 213.68, down 9.59% today and down 5.36% for the week. ORCL's interesting because it's not pure semiconductor, but it's caught up in the broader tech sell-off. ORCL's got strength in cloud and databases, which are tied to enterprise spending and AI infrastructure. The day's pullback hurts, but ORCL's holding up better on a weekly basis compared to the pure-play chip names, which suggests there's still some belief in the software and cloud side of tech. KLAC is at 1929.20, and this one actually held up the best of the five movers. Down 9.47% today, but actually up 0.39% for the week. That's a real tell. KLAC is another semiconductor equipment play, and the fact that it's positive on the week while everything else bleeds suggests institutional money knows that chip equipment is going to be needed no matter what. Even in a slowdown, you don't cancel orders, you just delay them. So KLAC's relative strength here might be your canary in the coal mine, that the semiconductor cycle's not completely broken. And finally, let us look at tomorrow. So here's the bottom line. Today was a risk-off day driven by a stronger-than-expected jobs report that's pushing Fed rate cut expectations further down the road. Tech got hit hardest because high-growth stocks don't like higher rates. The silver lining? Some of the semiconductor equipment names are actually holding up, which tells you that longer-term AI infrastructure spending is still in the cards. It might just take longer to play out. Monday's a holiday. We're back at it on the 8th. No major events flagged, but keep an eye on any earnings whispers or Fed speak over the weekend. The commodities action today, weak crude, weak metals, suggests some real economic caution out there. But volatility like this, it creates opportunity. Stay sharp. We'll be back to keep you posted. For your daily market update video, don't forget to hit that subscribe button and turn on the notification.